take attendance. I think 2 are still missing, but for those of you who don't have the name cards out, then this is my trick again. So, Alexander. He's not here yet. Okay. Claudius.
Yes.
You are here. Great. Diana and Fred are right in front of me. Stephen. Okay. Jeffrey. Victor. JP. There you are. Tula, you're the one with more names than I can figure out here. You know, it's either Panagiota or how do you really want to be called?
Tula.
Tula, even though it says Panagiota as your first name.
Because nobody can pronounce that. My full name is Panagiota.
Oh, okay. All right, then we'll do it that way. Great. All right, Juan, there you are. Thank you. Chadwick is here. Brandon, you're here. Emmanuel, there you are. Thank you. Marianella. Olivia, who just said hello. Carol.
Here.
Carol, oh, there you are. Yes, thank you. Quincy, there you are in the back. Rebecca just walked in. Thank you. Kyle, there you are. Paul, behind there. Erica, next there. And Nick. Okay. All right, we're only down 1. That's really good. All right. So everybody, I want to make sure you close your laptops. I'm going to start off with the exam. I'm going to make it easy. We're going to get the fun stuff out of the way first, right? Actually, no, I just don't want anxiety hanging over your head. And I want you to know that what we're going to do is the following. We're going to have a 30-minute closed book exam. So it's your calculator and your brain. That's what we're looking for right here. And I'm going to give you that time. If you finish early, that's great. I guess you can read your version of the Wall Street Journal or New York Times. And then we will review the exam later today. And that'll give me an opportunity to just see where we are, because this exam is about my understanding what you know, also you understanding it, and helping us to guide, once again, our teaching to you. So, let me just mention a couple of instructions. It's a single page, 2-sided. There are 10 questions. I ask that you put your name, print as neatly as you can, and if not, then I guess I'll have to get a translator to decipher. At the top of both sides. That way when I turn it over, I'm saying, oh, who is that? I don't know, okay? And hopefully the lines are big enough. You'll see there's a mix of box questions and also the math stuff as well. So let me hand this out. 4, 5, our big row right there. Pass this down if you would. Thank you very much.
The second batch. Yeah, the first batch they got theirs today, but then the second batch should be coming the next week.
There you go. Okay, ladies and gentlemen, begin. And I'll let you know when the 30 minutes or so is up. I kind of put this up here. It's about 8:07 or so around 8:37, give or take. We'll ask that you hand them back to me. Thank you. Missing Alexander. Here he is. We're doing our test now. Closed book. Your calculator and your brain. Here it is. Please put your name at the top on both sides.
Can I scratch some ideas on a blank piece of paper?
Pardon?
Can I scratch some ideas?
Yeah, you can scratch. You know, if you need to do math and things like that, by all means. Yes, in front of everybody, that's fine.
Calculator.
I don't have any. You an extra one here?
I'm not doing the math.
You need to use your own, of course. You haven't downloaded the calculator onto your phone by any chance? Okay. Okay. You know how to use it in Control C? I did send out an email to everybody to make sure they had a calculator. I hope you all saw it. So I see most of you do. So let's see if maybe I can get Dr. Forty to bring another one down. Meantime, do the questions that don't require the math. Okay. Carol, you need a calculator? Yes, there we go. Doctor, there's a delay in the loop here for whatever reason. Thank you. So the clock is here, it says 8:26, another 15 minutes or so. Got about 5 minutes left, folks. Okay, why don't we put our pencils down, hand them in, or relieve you from your morning recital here. Just pass them over to the pen to the center, that would make it easier. Thank you, ladies and gentlemen. grab everything, even from the far corners of the globe here. Here we go. Get your name there, that's the most important part. Yeah, both sides makes it easy for me. All right.
Here you go, sir.
All right, so folks, we're going to review this later, but I just want a show of hands. How many thought this was just an easy slam dunk?
Most of it.
I didn't.
No. All right, I'm not all right.
I got a question.
You have a question?
Yeah, I did.
I hope I have an answer.
Okay, I've been in school in 20 years, but when I was in civil engineering, we worked through practice, there's problems, and I've done a lot of math in my life, so I'm very capable. I didn't see chapters 1, 2, 5.
4 or 5, that's right.
I didn't see any of that, so did I miss those? Or-
No, so we'll review this.
Yesterday at 4 o'clock, I was on an airplane. My work was in the barn, my study was in the barn, done. I was on an airplane traveling, so did I miss those, or what was I?
So once again, we'll review at the end of the day, because actually this is not just about math. This is about how you think and apply things. And so everything that was in this test was either in our class, the last class, was certainly what was up on the presentation, which you can all see in Blackboard. The second part is that it was part of the math that Dr. Forgy presented to you, and then of course in the book. So put it to the side. Let's instead now get to the news of the week and some of these other items. We have until about 9:30 just to give you a timeline, and at 9:30 we will carpool our way to downtown Fort Lauderdale. I just actually emailed directions to you. I emailed other things to you as well, and we'll see how we can go. But first thing, this is all about news and being alert and aware as a developer. You are going to have to be focused on what's going on. So actually, I just received this from my contact at the Wall Street Journal, and no reason that your name truly just has to be highlighted there. So all of you in green actually have a subscription to the Wall Street Journal. Olivia, you tried to go on, but couldn't quite get on. So they've given everybody a free subscription for a week, and I sent you the instructions just a few minutes ago to go back on and click through. So those of you who don't have it, once again, this is required. It's $1 a week, and if that's a financial hardship, talk to Dr. Forgy. But this is really where you can get a lot of your news. I couldn't get the list of you who have been on the New York Times, but hopefully you will all do that too as well. And the focus there is really because an informed developer knows what's going on. Because if you understand world events, local events, and the market, you'll be smarter. You'll be able, in fact, to take these kinds of questions, and the doctor and I, we drive by a building and we're doing this math in our heads, right?
Absolutely.
Yeah. And yeah, it takes a little bit of experience too. There's nothing wrong. By the way, there's a great link. The calculators that you have here, Erica has it, and for $4.99 or $5.99 on either Google Apps or with the iStore, the Apple Store, you can download that and it will be in your calculator, and it's really handy. You don't have to worry about carrying a second device, and frankly, you don't have to worry about the batteries working as well. So I'd like you all to share with me what news happened in the last couple of weeks, because there's been a lot that's been going on. You want to start off, Alex?
Yeah, the glass shortage. I was reading the Wall Street Journal the other day, and for big skyscrapers, especially in New York, they're having a shortage of glass for the buildings. And now the related groups started to open up their own glass factory because there's such a shortage.
It's a great article. You're right. We'll talk about that. And it's interesting. Glass shortage. What does that have to do with real estate? An awful lot, right? And so, you start looking at what's going on in this way. Any other interesting news of the week? I mean, there was a really big news article, and we'll get to that, yes.
There's an increase in construction spending, highest in 7 years in June and July.
All right, why? Remember, you read, and then you've got to ask why.
Contractors are too busy.
Well, I don't know if that's the right answer. Let's hear JP's answer.
I think that's it.
Okay, all right, we'll think about it. Yes, Emmanuel.
Going in the south part of the business journal, there is a famous real estate broker that is looking to develop the first real estate offices since
Okay, and so once again, why is that important or noteworthy?
He thinks that residential market and condo, including in Miami, is going to eventually slow down and they need to start building offices next.
Okay, all right, so in effect, this particular real estate professional said, I want to follow what he thinks is where the market is going, okay? Any other news of the week? Yes, Chadwick.
Fannie Mae said that they're going to start indexing housing prices and producing reports and publishing them, which would give national level trends because they can look at, they go out and figure out what housing prices are.
And what makes their index any better or worse than the Case-Shiller index, by the way? I hope everybody knows by now what the Case-Shiller index is. No? We'll get to that at some point.
I think they're doing a lot of subsidies, and so they're doing a lot of things in the market that is not in the, I think, the fair market value stuff, and so they might be able to.
Interesting, and in fact, actually, just because, does everybody know what Fannie Mae is? You've heard of Fannie Mae? That's the Federal National Mortgage Association. Fannie, Freddie, you have to get to know these people. In fact, because they're the government subsidized, in fact now government owned organizations that basically support all residential mortgage origination in the United States. Without those two organizations, you wouldn't be able to get a loan, or you as a developer wouldn't be able to offer the loans for your condos or houses that you're building. And there's a reason for that. I don't know if that's good or bad, but they are the intermediaries that do this. A couple more news articles. Yes?
I read a news article about New York, how there's an increase in shelters, and what they're seeing is that the private owners of buildings are seeing that they'll get more income for their apartment because of the government program that provided for homeless people. So they're pushing their tenants out so they can have the government pay for homeless people. Now, so it's like a cycle.
All right, there is a cycle there. And so what's the larger lesson, or is there one for us in South Florida? Maybe there isn't. Okay, I'm not saying there is, I'm just asking the question. And so, once again, what happens in New York doesn't always happen everywhere else. What happens in Las Vegas stays in Las Vegas, right? Okay, all right, wait, Carol, yes?
Yeah, three things. One was,
Three, wow.
yeah, because they're all connected.
Okay.
They're talking about ghost factories now in China and how that industrial relation, what that build up and all that capacity, they have overcapacity. The price of fuel per barrel, how that's coming down, and all the OPEC countries are depressing it, and both in Russia and US, we have to be cutting back. And there's one more thing, the rush to buy at auction the US Treasury bills, because I can see that the bubble that we went through with the overcapacity and all that, the connection, that change is going to come in terms of the world market and prices, and that is a connection.
Okay, there's a connection, and so let me tie that together for you, because that was very interesting. Hold your horses, I'll get to you next. And that is, frankly, when you look at world resources, and that will go to one of the items that I'm going to talk about, is that when there's a collapse in China, where in industry, manufacturing, okay, well, demand goes down. Price of natural resources and oil goes down. Issue here, what happens? People are invested in that flight of capital to safer investments. U.S. Treasuries. The U.S. is the safest of all the economies in the world because the dollar is, in fact, the world's currency, right?
There is was an article I read about international people getting visas to get green cards, and that money is going for development of projects of low income in New York, of low income people, and they have to renew those visas. The law in the Congress this year, so this international money can still go to develop low-cost,
Okay,
low-income
all right,
projects.
so you've got part of that right. It's interesting. You want to pick up on that, Emmanuel?
Yeah, it's the EB5 program. So basically what it means is that foreign investors could invest in the market, and I think the cap right now is a minimum of 500,000.
No, that's not what.
All right, so there's a relationship here. So let's be clear. And why? Do you know about the EB5 program? Okay, all right, then let me mention that. And so it's an investment vehicle. Look, you want to raise equity. Where do you find that equity? with Dr. Forkey, he's got lots of money to invest in your project, right? Maybe, maybe not. And so if you can't find the money there, then you're going to go to other sources. And if you can't get domestic sources, you go to international. We have a program called EB5, which allows investors from any country, but primarily China, to invest either $500,000 or $1 million. It can go to any project, not just a low-income project. Anyone that's qualified, because the project produces American jobs. And if it produces either 5 or 10 jobs, then what do those EB5 investors get? The green card and the path to citizenship. So if you got money, you can buy your way to citizenship.
It's paid for your
I think
visa.
I was reading somewhere that they were actually allocating more of like the visas for Chinese people because there's so many of them coming in. There wasn't other companies that they were reallocating more, I guess, spaces for the EB5 program for just people out of China.
So the challenge is that the allocation, the quota has been tapped out. And now the question is whether they'll enlarge the quota. All right, any other news item? I'll give it to you, Fred.
Oh, the Dow Jones was affected by the China stock market.
In what way?
But I guess everybody was selling off stock in China, and it affected the Dow Jones. It dropped.
Okay, so the stock market dropped. Is that important for us in real estate?
Yeah.
Why?
Well, this year, but even the last few months, you start seeing higher and higher, like Reggie said, in residential sales. But over the last 6 weeks, the market's down. That combined with fear of the Fed raising interest rates later this year.
Okay.
Has
All right.
speculation going crazy.
All right. So
Speculation's all over the place right now.
all right. But wait a second.
Where does that money go?
Wait a second. I'll let you speak, and then I'll wrap this
I
into
think
a
an interesting
different
argument. Generally, the concept is no, that we aren't affected because people actually want to put more money in real estate because we're a safer industry. But there is less, I mean, with the size of the drop, there's less equity, and so banks, people, private equity may not be able to, REITs and stuff may not be able to.
Okay, all right, you're onto the right track. So let me wrap this session up because I have a lot of news and I'm looking at the clock too as well. And that is, remember one thing about the stock market. The stock market is not the economy. And it is famously said by Paul Samuelson back in 19-something or other, the stock market has predicted 9 of the last 5 recessions. Think about that, okay? And so when it goes down and up, what it does is it does affect the immediate availability of equity. So for example, if you read the mansion section in yesterday's Wall Street Journal, so high-end purchasers of luxury homes, I don't know, I may have lost a couple $100,000 in the stock market last week or the week before, so I'm going to hold off on buying that $3, $4, $5 million place. But does it affect the underlying economy? Only eventually, so you have to be really careful. And so yes, the stock market went down. Yes, people are afraid. Is it because of interest rates? Actually, no, here it's because of what happened in China, that's for sure. And yes, they're concerned about interest rates. Well, wait a second, if interest rates go up, gee, the value of, remember, stocks go down when interest rates go up, and when interest rates go down, stocks go up. And that's a different class. Just remember it's an inverse relationship. So let's talk about some items, if you will. So you covered national whatever, but before I show that, everybody here knows what the unemployment rate is in the United States, right? Yeah, just a show of hands, you all know, right? And you know how many jobs were created last month, right? So why is that important? Pardon?
People work, they can afford to buy real estate.
That's one reason, that's correct. So employment generates the potential for office development, housing development. So what's the employment rate in the country? We all know it is
45%.
what? No, seriously. It's a number that you should just know like that. It is 5.1, okay. And how many jobs were created last month?
180.
Wow, okay, 173,000 jobs, and by the way, that number will change next month because they will revise the number. But the point is, it helps you to understand trends. Numbers of and in themselves are not important, but it's their relationship. I think I said this 2 weeks ago. And so here are the numbers. Yes, it's 5.1, and you know, all those economists, they predict, and they figure out what's going on. How many jobs? Well, one economist got it right. In fact, 173,000 jobs is low. But wait, the unemployment rate went down, but fewer jobs were created last month than the 2 months prior. What's going on? Pardon?
A lot of creative math, but a lot of different people.
No, it's not really creative math. What?
Either more people are getting employed, so there's less people that need to get, or more people are not reporting.
Not more people are either not engaged in the job market, or also they're underemployed. And that's the last thing I'll mention about this. 5.1%, the real unemployment rate should include the underemployed. In other words, those of you who aren't working full time, you want a different job, that number is somewhere up in the double digits. But you know, we look at these trends and we figure, okay, payroll, you know, I'll keep going to this because if you're informed, you can make judgments. Ultimately, and at the towards the later part of the day today, we're going to talk about what your major study project is going to be. And when you assess an area, you have to go from the macro to the micro. This is all part of that understanding what's going on. And you can see, yes, seasonally, the jobs adjust, the rates change. But what's important is the trend over time. And so while look at this, 5 years ago, 9.5%. Now, how many people are employed in the US? How many people are in the job market? Do we even know? So I'm going to guess for you. How many people, by the way, are there in the US? 350 million now. So actually about 100 to 125 million are full-time employed. So here, just man, we'll just round the numbers, about 10 million people out of a job. Now it's 5 or 6 million people. Wow, that makes a difference, right? It should. And then it also depends on where this is happening. So think back. 2007, we're just at the peak of what's really a great run, right? And so you look at this map, Florida's doing pretty well, right? Michigan isn't. Why? Manufacturing. Wait a second, manufacturing, that's interesting. Yes, probably right. All right, so let's do that. But let's just roll through this series. So I picked July for every year from 07 to 08. Oops, things are starting to worsen. You probably don't remember in September 2008, everything crashed, right? Wow, look what happens within the span of the year. And that's when we went up to that 9.5% or so unemployment. But look at this. North Dakota, South Dakota, and Nebraska. I hope you know your geography. They're doing well. Why?
Fracking, oil.
Pardon?
Oil.
Oil? No, you're close. It's gas, natural gas. And what's going on there? Fracking, or fracturing, whatever you want to call it. And wow, let's just keep looking at this. 2010, can you imagine why people wanted to go to North Dakota? I know there's nothing in North Dakota, but don't make the mistake also saying, wow, this looks great. How many people do you think live in North Dakota?
You know, I
Barely 1.5 million or 2.
I have a question about that.
What's your
I
question?
didn't read the article. I saw a headline that say the net effect that's actually been bad. I don't know the 3 words. There's like a big boom of, but how many people are actually going to stay in North Dakota?
Well,
that's slowing down.
That's right. So it's social, political, there are all sorts of trends. We're just talking about numbers right now. Of course, you've got to be smart about this and layer over. So you go to a boom and, you know, everybody moves there. In fact, my company at the time, I was the COO of Sheldon Good & Company. We auctioned real estate. We did a number of auctions. We were selling property up there because manufactured housing, they're bringing in, you know, all these trailers for the men who are coming. By the way, the ratio of men to women was like this. It was all messed up. And so now, when things aren't going so well, what do you do? What does that do to society? So look, you'll see there, and everything in the middle, gee, it seems to be working. I guess that's right. And we keep moving forward. 2011, we're slowly starting to come up and out, and boy, I guess fracturing really makes a difference there. Sure does. And you know, finally, we're getting up to last month or 2 months ago. And what's going on here? By the way, you all know what state that is, right? West Virginia. Okay, what's going on? And what about it? So, but wait a second. So, here and here.
Shift in energy.
Tied at the hip. Yes, thank you. Because this state is all about coal. So, by the way, I don't know if they were productive or not, but because the price of gas fell, people stopped buying coal. In fact, utilities have switched. And it's fascinating that we've helped to accomplish climate goals simply through this technology revolution here. And boy, West Virginia is in a sorry state. In fact, anybody been to West Virginia? It's pretty, but it's in a sorry state. So anyway, look, you know, I get a lot of this information. I'll put that link up for you. Every week, you should just click on the Bloomberg Economic Calendar. Yes, Rebecca?
Can that happen again? Because the next recession is seriously, like, scary.
I didn't hear the last part.
Can we bomb like we did in 2008 again? Because that scares me a lot.
Sure we can.
I don't know about the rest of the
I guarantee you that there will be a recession or a crash. The problem is I don't know when. Okay? And so the challenge is understanding how to do it. You have to know that cycles are going to take place. In fact, we're going to talk about the economic cycle a bit because it affects your real estate and when and how you should invest. Once again, this is all about teaching you the fundamentals in development. So I can't teach you in this short course all of the tricks of the trade, and that's when the next course is, and so on and so forth. But that's a link, and you can look at this information. So for me, News of this Week, great article. Whose neighborhood is it? Segregation has changed in this country. And this is, hey, that affects housing. That affects jobs and location. In fact, because of all the anti-discrimination laws, civil rights in the 60s and 70s, we actually had an improvement in integration. But since 2000, we've reversed the trend. That has severe implications for communities. Why do those things happen? What causes these changes? Politics, laws, white flight, economic issues. In fact, it's not just white flight, it's middle class and upper class flight of all races and demographic groups out of the center cities, except for the real poor. So that was a good article, and once again, I'm going to send you the links to these articles because you should look at it. You should read it. Here's another thing. No one mentioned that real estate investment trusts having issues. Now, everybody knows what a real estate investment trust is. It's a special vehicle that was created by the government, and in fact, they're now all around the world, which basically passes through your returns. And it avoids taxation, and you have to have a certain limit on the number of investors, and the money goes. But REITs, which have been historically for the last 5 years doing well, look at that green line down below. Now, who was it who mentioned interest rates? This is the problem. Because REITs, of course, are all about the real estate. And if they can't borrow, and if the rates are going to go up, or the fear that the rates are going to go up, their ability to build and their capacity to bond that environment is much less. So things are going on, and that's important as well. Now, of course, great, you mentioned glass. Do you know what happened? Tell me one thing that was really interesting about that article. If you're a developer and you got a glass shortage, what the article mentioned?
The prices are rising too on top of that, but now they're getting into their own, they're making their own glass now.
There you go. Okay, so the related companies, you know who the related company is, you know, George Perez here in South Florida, and it's at the hip with Steve Ross and the company up there. The related companies bought their own glass factory. They're building so many towers in New York, they bought one upstate.
They spent $16 million making their own factory.
That's right, but it's going to be cheaper for them, okay? By the way, why? Why? Because when we had the bubble, the manufacturers closed their factories. It takes time to ramp these things up. And oh, by the way, we can't just go to China and buy glass. It's not because they can't make good glass there, but the cost of shipping and transportation far outweighs the value of the product.
And we remember the drywall experience.
Oh, y'all, that was another issue, but not directly related. Okay, now this bottle, okay, I guess this is here in the US. How many of you have drunk Fiji water? You've seen those bottles. Come on, you know the cost of transporting that and everything, far more. So you've got to be careful. You've got to figure out where's product being built and how do you source that kind of thing, because construction costs are the key. So I'll give you links to this. Here's another really interesting article. And this is important no matter where you are, whether you're in Philadelphia or not. Billboard of Light. This 15-story building built in 1890, National Historic Register. Actually, in 1948, it was one of the first hotels to integrate. You know, the black population moved up north of Center City, but in the 1970s and 80s, the neighborhood went down. And so, who here's been to Philadelphia? Been to Center City? Okay. And then about 2 miles to the north is, up Broad Street is Temple University, the medical center is doing well, but there's a big hole in the donut and called North Philly. When you have a big property, a visible property that becomes a billboard, it alone can cause blight. How many of you have driven down I-95 to Miami and you see a couple of buildings on the wrong part, you know, over in Liberty City or whatever? My goodness, they've got graffiti, they're boarded up. Nobody wants to invest there. Perception is part of the reality. And so, the good news is, investors come in, raise $40-some million, and what's happened is now a couple of $100 million, they're moving forward with this, of development is starting around this area. Wow. So think about it. If you can be a catalyst, then, my goodness, you create value not only for your own product, but you should look at what others are doing in the marketplace. You don't have to lead all the time. Sometimes being a good follower is important, yes.
You said something about white flight. What period of time did you say that white flight was?
So white flight meaning what happened, let's talk about Detroit. So in 1970, the Supreme Court ruled that integration could take place, and there was a case in Detroit alone. And by a 5-4 decision, they basically said, no, you don't have the right to just limit who can go to your schools, and people can go to any school. But what happened is that the white population there, which happened to be the more affluent ones, said, well, if that's the case, I'm going to leave. And so that started the decline of Detroit. There are many other factors there too. And by the way, what it means is, if you go back to the article, the tipping point is not about race alone, it's about economics. It's about where you want your kids to be. And the problem is that a lot of the middle class, no matter who you are, has left town. So to
I
speak.
wanted to follow up on that because currently there's a reverse trend and it's economic driven.
Yes, it is. And so there's a huge debate amongst demographers and others. If you go to the ULI meetings and you see Joel Kotkin, K-O-T-K-I-N, on one side of the coin, and then you see Ed Glazer and others on the other side, Joel Kotkin says, resurgence of urban centers, movement to the cities, not happening. It's happening in a small scale, but most people want to live in the suburbs. Most people ultimately probably get married, have kids, whatever, and they want to do it where they have their own piece of turf. So there's an interesting dichotomy there, and the question is, which markets do you see the stuff going on? So when we get to downtown Fort Lauderdale today, we should ask the questions to Stiles Corporation and say, why do you think this makes sense? The people who we're going to meet, hopefully they're going to be there. I'm going to ask them to give us their bios. Why do they want to make this investment? What is it in the market that made sense to them? And so, yes, while there's a movement out, there's movement in. The question is, you got to figure out where and which home. And so, what's really interesting to me was this article too in the Wall Street Journal. Anybody saw it? Property deal of the week. So now this is in Minnetonka. Everybody's been to Minnetonka. At least it sounds good to say, right? Up in Minneapolis, if you will. And so, let me relate this. Everybody know where the Boca Park of Commerce is? Probably not. You know, when you drive up and down 95 or any highway in the US, you see these large office parks or industrial parks. What's happening is that here, and this particular developer said, oh my goodness, I got the health club, I got stores, I've got offices, I don't have a place to live, maybe it makes sense to start building apartments where the walk score and the walkability is not so bad. That's actually what's happening here in South Florida too. And so I can tell you, it doesn't say it in the article, they got it cheap. Because they were ahead of the trend. They figured, wait, where's the next opportunity? This is something that the REE data can help you look at. And looking at information, you can figure out what might be happening through that. So let me start off, because we'll see what I'll be very careful on our timing. So the reason why I'm mentioning all this about the economic cycle, there was a really good chart in the book. But I'm going to take you to one chart and then we'll overlay it with the other chart. And I thought of making that the question, but maybe I'll do that on the next test. I think what we'll do is talk about this. So the economic cycle, right? Just a guess right now. Folks, where are we in the cycle? Do you all know about cycles? Remember economics class, right? So where are we in the cycle? Let's have a hands here. Are we in expansion? Hands up. All right, we just have Steve and a few others, Emmanuel. Peak, are we at the peak? Few more, okay, even Dr. Forgy thinks that, but don't let that sway you. Are we in a recession right now?
No. Come on, Chad.
Yeah? Okay, I don't know where you're from, but we're certainly not at the bottom of the trough, right? Okay, so look, even here, remember the economists, that's why they look for consensus. We kind of average up what's going on. So this is really important, and we figure out what's going on in the cycle. Where are we in the cycle? So if we're in the larger cycle, I think, Alex, you must have all the answers. You want to tell me how everybody else is going on? So, your voice is there. Okay, look, in this cycle, this is a general cycle. Rebecca, what's so interesting on your iPhone?
This woman's powerful tattoo will help you understand what it's like to have depression.
Okay, great. So then you'll know about tattoos, but you won't know about economic cycles. So let's be careful and focus, if you will. So look, this cycle is just a general cycle, right? And remember those maps of the states? Not all the states were in the same cycle, right? And it means cities as well are not always in the same cycle. I mean, let's compare, we'll compare Miami and Houston to Fargo, North Dakota, I guess, or Indianapolis. We're in different places. And so the key is to know where your market is in that cycle. And here's that chart from Rick Piser's book, courtesy of Glenn Mueller. I don't know him, but I know Rick. And he took that and basically said, wait, we can relate our real estate activity to it. Now this is really fundamental. But you start thinking about it, you say, wait a second, all right, if I'm recovering, my rental growth isn't so good, but wait, there may be a demand. Not building just yet. And then as we get into expansion, oh my goodness, the rents are rising, the start of construction, and you got to figure out where we are at the peak. We're going to go through what I call equilibrium analysis later today after our site visits, and we'll talk about equilibrium in office space. But every product type gets an equilibrium. And then, oops, if you start building too much and you got too much supply, bingo, you start going back down the cycle. Rent starts to drop, you've got a surplus of space, supply is over greater than demand, and we're bound on this. Now, this is the real estate cycle, and it may not be the same as the economic cycle. Is real estate a leading or lagging indicator? Do you know what indicators are?
Yes.
Right, oh, so we do. So what are indicators?
Pointing where we are going, where we are and where we're going.
Okay, so the GDP, it's a little bit of an economics lecture. The gross domestic product, is that leading, lagging, or what? So how many people think it's a leading indicator? How many people think it lags? Well, guess what? It's neither. It's a coincident indicator. In other words, it's a snapshot right now of what's going on. But real estate is lagging. We're picking up on everything else, and we run behind. So you've got to be smart. And the real trick is, once again, ask the folks at Styles, wait, are we getting a peak? When did you start this building project? How long ago? Are you going to miss the peak? And the irony is, if you go back to this chart, when is the best time to buy and start building?
In the trough.
Right here. But guess what? That's the time when you usually don't have the money, the investors are uncertain, they're afraid. What do? So that's a real challenge, isn't it? Or what you do is you go to China and get EB5 money, right? Or you have a good private investor behind you who is smart enough about the cycles. So if you understand the cycles, all of a sudden you can begin to look at these items. So let me just go through a few more slides, if you will, about the economic cycle. So where are we, as we discussed? What's different about this cycle? What's different about this cycle? Every cycle is different, and at the same time it's the same,
We're
right?
pulling out of it really slow. It's taking a lot longer.
Yes, okay, that's right. The time, it's really taken time for people to get jobs. What else?
Somewhat artificial.
Okay, what else? Look, you know what, I can see, like all these sorts of things. Duration, that's right. The timing, jobless, because people, the financial crisis, that was unprecedented. Not since 1929 did we have something like that happen. Everything that's going on, and I'm sure we can draw a path. Syria, 23 million people live in that country. Do you know how many people have been displaced? DP, displaced persons? That's a term we got back to World War II. 12 million people. 4 million are next door now in Lebanon, Jordan, Turkey. Those countries aren't big enough. And where are the rest of them? They're headed to Europe, right? Oh, question for you, wait, before you ask that question. So, what do you think? What is the economic and demographic cohort of those refugees that are streaming to Europe?
They're young, they're educated.
And? But you're right, young, eager. So how many of you think that it's the poorest segment of society? No, it's actually the middle class, the wealthier segment. They're buying their way out of the country. They're also getting held up at ransom. Some of the really smart folks, so it's taken long. Did you see another article? It was in the Wall Street Journal or the New York Times, I can't remember. They bought themselves a ticket from, don't ask me how, from Damascus to Helsinki. $1,800 and then another couple of thousand, and they're working their way, and they went and they got into Norway. Now they're back into the EU. Most people, though, are taking a boat, we're crossing over to Greece, and these are people, 800,000 people. By the way, how many people live in Germany? 50 million. 800,000, less than 1%. Very nice of them. And how many does President Obama say we should take? Remember, we have 350 million? 10,000? Look, you can watch Bill O'Reilly all you want about terrorists coming in, but I don't think 10,000 is going to make a difference. And by the way, it would take 2 years for each of those people to be admitted in the country. So what was your question?
I was looking at it, and it's a tremendous benefit for the European market, especially Germany, for having those people. It's going to give to them the boost that America got when we
with
opened
Mexico
our
and the migration from Latin America. That's right.
And also their demographic, because they have an aging population, this group of young educated kids.
You are right. You are right. Yes, Alex.
I was reading at the top of that, but the problem they're facing is that some of the people from other countries are posing as Syrian refugees to get into the country.
It's a huge mess. But of course, there's nothing neat and clean about it.
What happens when they don't stay? And they move back to where they came from, because that's really where they came from.
I don't have all the global answers. So many would like to go back, but the economy is so destroyed in Syria, it would take generations, I think, to get that to work. And so look, we're talking about all these sources: crisis of confidence, government retrenchment, polarization, can't get the Dems and the Republicans to agree on anything. Manufacturing led the economy. So I'm going to take you through a few more slides. I may have to come back. Looking at this. There's another way to look at the cycle. By the way, how many of you visit the brokerage websites? Jones Lang LaSalle, JLL, as they like to call themselves, Good, CBRE, Cushman Wakefield, now owned by DTZ. There's a whole bunch of them. Jones Lang LaSalle took that chart, which went like this, and put it into a circle. And they said, remember here they have rising, peaking, falling, bottoming. You can relate that to trough, recovery, expansion, oversupply. And so we'll save it for after when we come back. We'll talk about how you can look at markets this way. So once again, if you're smart about the market, and I have a real bias here, the doctor's left the room, so we won't tell him the secret. And that is, if you know your market, and that's why I'm so hep on REE data, and we'll talk about Greece when we get back. We'll be fine on how to use it, or not to use it. And if you know that, then you can be smarter than the next person in the room or when you go look at your property. So right now, so let me just switch. I'm going to show you so where we are. Because I want to make sure we are not late for our guests in any way, shape, or form. Okay, so let me bring this up here. Alrighty, fine. I sent you a link, and we are going to go drive. I'm going to ask you to carpool, if you will. Look, you know, let's save a little bit of gas and whatever, and we get to know your classmates better. So we're driving east 10 miles or so. We're here in Davie. We're going to 790 East Broward Boulevard. I hope you all at least clicked on the links. You can see the building. We're going to go see this highest new residential building that's going up downtown. Yes, Alex?
Where are we parking? Are we parking on the street?
I'm going to tell you that. Don't worry. So, good. I'm glad you're thinking ahead of me. But, all right. So, here. Now, this is important. So, let's go to 790 East Broward.
I know where the place
Hey, who your jets? Who your jets? We're not going anywhere yet. Hold on. That's okay. No, that's okay. You're living. You can stretch. But Chad was like, you know, doing the wrong thing. All right. So this is just a weird picture, if you will. Let me just back up. So there is a building on the corner. You know, you're going to be coming up Broward. Maybe you think I'm anal about this. I want to make sure you all get to the right place. Okay. So you're going to be coming eastbound down Broward Boulevard, and you're going to turn right there when you see this building. So let's just go a little bit here. So right there at the intersection, you're going to see this building. It's called the Chase Bank Building. You're going to turn around and go into the parking lot. I think you might be able to go in here. I'm not sure. Park in this parking lot, because then we're going to walk the block down to the building, and we're going to meet John Auerbach and Meredith and Jeff and Rocco and the other folks there.
So it's like 8th and Broward?
You know, it's funny, the intersection, thank you, let's pull it up to make sure we all know exactly where it is again. Whoops, that's the wrong image. Yeah, so let's go here. So, basically, it's Southeast 8th Avenue. If you go beyond Southeast 8th, you're gone too far. The parking lot's right here. And the building that we're going to is right here. All right, hopefully nobody is open. You know, folks choose. Wait, just one more minute. So you know the schedule. All right, we have a couple of hours with them. Hopefully it's going to be informative. I want you to just ask the questions away and tell us everything. So that's going to last about 2 hours. And then from there, we're going to walk a block to the Axis space. And we're going to have a presentation. So we're going to get our residential and our office together there. But we'll leave the cars where they are. Then we'll come back here for lunch and we'll have the rest of our day. Okay.
Should we leave our stuff there?
Yes, we're going to lock the room. It's going to be secure. If you want to take, you know, your phones and everything, do that. But this will be locked and we'll be safe and sound. Okay, thank
You gonna take a leak? Be right out the door.
Yeah, if you want to take notes, I mean, and you can store it in your brain, that's good. If you can
Make sure you guys carpool. Don't just take everybody's car because you'll be challenged.
Right, so come on, join up, get to know your fellow classmates. I could have just counted you off 1, 2, 3, 4, but I decided not to.
And there's one bottle of water if you want one for
take
the.
some water, it's going to be hot. We're all going to do the hard hat thing. And you can leave your stuff here. We're going to lock it up. The room's going to get locked.
It's already locked.
These things.
Yep.
We'll be okay.
Oh, okay. We can take 2 more.
No. Just like that.
Hey, thanks for seeing this. This is great.